Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots in the markets for today, Monday, April 4th. Uh, yeah, it is April 4th. It just kind of blows
Get the
me
check on
away.
that one.
I know, I got to
It's
think about that. I don't, this year is just evaporating like the last 2 years. What do we have going on this morning? Not a lot really to talk about. There's no real headline news. From the headline news, what we are looking at right now is an inverted yield curve between the 2-year Treasury yields and the 10-year. So 2-year higher than 10-year, slightly, very slightly. But are we looking at a recession soon? And really, what a lot of people are doing is they're waiting for those Fed minutes to come out on Wednesday and get a glimpse at what the Fed was thinking, which really plays into the one, the one interesting thing in the news is Jamie Dimon did publish his yearly uh, letter to the shareholders, and he highlighted three forces that are going to impact and shape the world moving forward, particularly in the next decade. Number one, the U.S. economy recovering from a pandemic, which we are not out of yet. And in fact, we're seeing some hotspots flare up around the globe. Then he's looking at high inflation. He's been talking about this for a while, but we got high inflation, which is going to usher in an era of rising interest rates. And that's what we're waiting for on Wednesday, is to get a glimpse at when the Fed's going to start and how much and how quickly. But right now the consensus is they're going to have to start doing half point rates to combat. They're going to have to do half point rate hikes to combat the inflation. And the other thing is the Russian invasion of the Ukraine. One, because we don't know how that's going to end. Two, there's going to be the massive humanitarian crisis. I don't know if you guys caught 60 Minutes last night. It is painful to watch, and it is an absolute tragedy. I would recommend catching the 60 Minutes episode from last night. And then the disruption in supply chains, particularly where it comes around energies. And we are going to be talking about um, oil and nat gas today. And we will pop over and take a look at the equities. It's a weird morning because the equities, we are going to be, Brian will get into it, the volatility, the fear index is actually creeping a little bit higher. But bizarrely, I mean, that usually happens as the markets go down. We're trying to open slightly in the green. So the market's trying to open slightly in the green, but with volatility up, it shows that there's a lot of concern, fear in the market. So before we jump into the charts and take a look, particularly oil, nat gas, and the equities, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And yeah, there's the chart where you can start to see oil catching a bid. We've certainly found a floor below. But Brian, I'm going to flip it over to you, and let's just talk. Let's get into some of this energy, and then maybe a little bit into the equities and include the VIX in that.
Yep, I'm sorry. I was just like the headline just came through about how Saudi Aramco raises oil prices for the U.S. and Europe in May. So it's always a great headline to see right before you go on. You're like, oh, fuck, stop raising our oil prices. Yeah. So overall, it's a typical Monday morning. There's not really a lot of true direction. If you look at all the latest news in there, there's not really a whole lot there. Um, the Kremlin 3 hours ago basically said we have no information on the status of the peace talks, which is interesting. I guess they're locked in a room and they're not doing anything. Germany's made some statements. The energy minister basically says a gas embargo would have economic effects for Germany. We must therefore act cautiously. That comes on the top, or on the other side of basically their defense minister saying that that's it. We should just ratchet up the sanctions on. We should go no oil. And it's kind of like, yeah, the defense minister, of course, says that. The economy minister is like, you're going to wreck that. You're going to wreck everything.
Right.
This is why we can't have nice things. So that's kind of where Germany's at. And also, another article that actually came out this morning was talking about how the recession begins. That if you look at the actual data, not people's opinions, beliefs, or whatever, but the indexes they use to determine when recession's beginning, it looks like, according to all the data, economists are likely to determine the beginning of the second quarter of 2022 as the start of the recession. Well, guess what we just hit? The start of the second quarter in 2022. So, it's interesting hearing Germany make those comments about, hey, listen, this is going to hurt us, right? It's going to hurt us. And then looking at the data, talking about how, again, a lot of the indexes that forecast that and show us that and are used to confirm it. And again, it's always done retrospectively about when you enter it. It looks like right now we're 4 days into the start of the recession in Europe. Again, Europe is a big area. There are global contagions associated with that. And I love it that the first comment up here is buzzword of 2022 is recession. So
Yeah.
we're going to hear a lot about it. And it's not just us, it's everywhere else. And again, raising oil prices, they're already high. That's something that's, just came out. But that's really it as far as, data goes today, or, as far as kind of where we're at with things. It was, I thought we were actually going to get more headlines. It just kind of seems like silence was the headline of the weekend. There really was not a lot out there that we didn't see. Zero Hedge having some very pointed comments. Tone deaf Fed presidents or president, they don't like Harker, I guess. And then again, record cases in China. They had 13,000, 1,400 confirmed and 11,000 asymptomatic ones. So again, I think our smallest state beat that in a day. So that's what they're reporting, but most of it asymptomatic because it's Omicron. So that's it, really. There's not a whole lot. Like I said, the recession word is not anything anybody wants to hear, but with interest rates as high as they are, currencies across the board really not moving. And we really have no news today. We have, business outlook for Canada, which is kind of like the best news that we have for the day. I think, again, Canada has their rate statement this week as well, not expected to raise. But again, this business outlook as well as their statement, I think we could have some CAD strength coming in. That's just kind of more of like a longer term. I'd be looking for, potentially the dollar CAD to drop. But we do have FOMC Wednesday. They are going to announce what the next hike is probably going to look like. If it's anything but zero point 0.5, I think the indices are going to go crazy.
Yeah.
To this point, I think the market has basically factored it in. And again, if it's, I don't know, if they only do a 0.5, then I'm not exactly sure what they're looking at. I can't answer that question. I don't really know.
Well, at least,
Um,
yeah. Well, they better get they can't just keep doing the 0.25 thing. So
Yeah, I mean, maybe they'll say Ukraine. Well, it's like, hey, we don't have peace in Ukraine. It's like, all right, are we going to go? I mean, when Yellen said that you can expect inflation to rise for the next year, did she mean that we're going to push that 40-year high into next year? 'Cause I
yeah.
feel like it's already having detrimental effects. And again, with it being that high, we have to raise at some point. And again, with Europe going into a recession, this
Yeah.
is
Unfortunately, we're
not
gonna have
shaping
to.
up to be.
Right, and we're gonna and the U.S. is flashing, potential recession with our inverted yield curve with the 2 and 10. Uh, what do you do when
Yeah,
it when
not
when
looking
when you
not
got a
looking great.
recession? You lower interest rates. So
Yeah.
we're battling, and we've got a weird anomaly. So yeah, let's jump in and take a look at. I see you got
Yeah,
the
I
oil
think.
chart
I
up.
mean, the biggest headline. We'll start with oil. We'll end with equities. Currencies is more or less flat for the day. Oil last week we talked about how it was really just kind of bottled in, right? We had sellers above, we had buyers below, and it was really kind of rattling back and forth. And it did. It rattled back and forth, closed kind of in the middle, and then it opened down here. We talk about those gaps over the weekend. I mentioned this. Look for gaps over the weekend. It did. It gapped actually right into that area of buyers. Kind of pulled up. The Europeans took control of that market and shot it right back down again. And remember, their reversals at 5:30 in the morning literally drawn right to that same level. 530 is right here. It reversed and went from what 98.50 all the way up to 102.50, a little bit
And
above 102.50. So
yep.
again, $4 raise from their reversal time in the morning, and it's been straight up. And we just got that news about the raising oil prices. So, looking at this on a technical basis, again, 1, 2, 3. You could say if you count this as just one, you have your 1, 2, 3. 4 got sliced through. So again, remember that 4 range is where we're looking for zones to break. That zone is officially that zone is officially out now, right? We'll take that out of the equation. And the next time we have any sellers are really kind of coming back into this range up here, right? Which is up to 103.72. I mean, how about that? Going from 98.50 all the way up to 103.50. And we haven't even gotten the U.S. session and where oil prices tend to rise. And then again, next target, parabolic mover over here, we could have a punch through, is up to 107. So, it's great that we're talking about $100. It's like, oh, look at that, $100. And now all of a sudden, in literally two moves. One to come up and get these buyers out. Number two, it's up back at 107. So and again, we don't have world peace. We still haven't. Russia hasn't cut it off yet. And they could. Remember, that's not till next week that we're going to start getting news about that paying, not paying.
Right, in
So
rubles.
I think there's a
Right.
lot more potential. Yeah, yeah, and like I said, it's kind of one of those things. I mean, if I went to your house right now and says, "Hey, listen, I want to pay in 1 million bottle caps," you're going to tell me no because that's not the currency form that you want. So
Right.
you know, the G7 can try to mess around with that, but you want the resources. You have to pay what the person that's selling them wants the compensation in. So I mean, I don't know. It's nice that they say we're only going to pay in that, but you've literally cut them off. And again, it goes back to Todd and I message over the weekend and outside of these programs. We're definitely friends outside of these broadcasts. It was interesting. Russia made all their bond payments this weekend. That was one of the other headlines as well. But they weren't sure how they made the bond payments
Yeah.
because
Yeah.
they were blocked from the system. So
They're
I'm like,
blocked.
you,
How do you expect them to pay it?
yeah,
Drop it in the
it
mail?
makes no sense at all. Yeah. It's like, yeah, they have bond payments to make, but you block them from the system. And it's like, oh, they accepted the payments even though that they were blocked from the system. So it was kind of two questions. One, again, the question was they were blocked. How were they able to make the payment? I mean, good on Russia for making it. It was a $447 million, you know, uh, you know, bond payment basically. Um, and then at the same time, it's like, well, wait a second, they paid, but wait, you just blocked them. How did you expect them to pay? I mean, is that
So
like a
the money
headline? You
can
blocked them so
go
they defaulted? Like,
the money's
I don't
going
know.
out, but it can't go in. It's like a Roach Motel, only backwards.
Well, that's the thing. Yeah, they blocked the network. They were like, we don't know how they were able to make the payment. It's like, wait, you didn't want the money? Like, I don't understand. Like, you blocked them. So what you can say? Oh, Russia defaulted on the payment. It's like, well, you blocked the payment. Like, I mean, good on Russia
Well,
for figuring out a way to get it in, but it's kind of odd that you're like celebrating Russian hackers so they could make the bond payment that the West didn't. It's like,
yeah,
this is what we're
they had
dealing
to
with
have
right now.
made
So
some type of
crazy.
accommodation somewhere. So
Yeah, yeah. So it's just an interesting scenario. But again, bond payments were made, so they have not defaulted on anything yet. They're again because of the energy prices, they still have plenty of money coming into the coffers. So it's not like they're starving for money right now. They're still making bond payments when everybody said that they were going to default. So
yeah.
that was
Well, we'll see.
interesting. And again, yeah, I mean, they haven't yet.
Oh
So I mean,
wait,
they've
before
moved
you do
to
that, let's
big.
jump over to nat gas real quickly before we go to volatility and equities. I just want to take because the two energies are what's moving.
Yeah, I mean, we talked about bouncing off this 584 level. Right now, I would say between the two, I mean, energy is always the Wild West anyway. Natural gas is rallying back up again. I would say right where we are. I mean, the problem with natural gas is it is such a geopolitical event right now. You need to be careful because when they're talking about cutting gas off and the gas payments in rubles, they're talking about natural gas, not necessarily oil itself. I mean, at any moment, Russia could say, "Oh, you're not going to pay? Okay, it's off." And that will skyrocket this up because we can't. There's no way to make up for that supply. Germany said that today. Like, listen, yeah, we're going to get independent, but not in the time that you would like
Right,
to have
not
it done. And if you
today.
piss them
Right.
off, if you piss, and he said we should tread lightly because if you piss them off, they say, okay, it's off. Have fun, deal with it, and there's nothing you can do about it. And again, nobody else can repair that, replace that supply. So um, I think natural gas is extremely risky. I am more bearish up here, but I think at any moment this thing could explode much, much higher. Is it a long term high? No, but again, they're working for ways to get around it. It's nice to make statements, and again, I don't think the United States is going to break contracts. If you break contracts, that opens us up to legal challenges from other countries about not fulfilling our end of the bargain for things. So it's really a really hard situation for everybody in Germany. So, again, in the overnight, it did the same exact thing. 3 o'clock in the morning,
Yep.
it looks just like 3 o'clock it dropped down, and then if you see where did the reversal come in? Actually, this one is a little bit later. This one it was down, and then 7:30 is where it came up. And again, that's where some of the comments out of Russia came from. So I would say of the two, again, I'm pretty risk averse. Oil, I think, is a fine market to play right now. Natural gas, I'd be extremely cautious. I think at that, I think natural gas right now is falling more back into the gambling stage because literally at any moment Russia could just turn off that thing.
Yep.
Particularly now that everybody's like, oh, there's all kinds of atrocities as they're leaving. I didn't watch it. I haven't seen it. I don't know, but war itself, I think, is not good. I think there are always bad things that happen. War is never a good thing. And again, it's just a horrible situation. So, but I think again, the more comments that are pointed at Russia, I think Russia is going to be more and more likely to say, No more natural gas. It's the Seinfeld episode about natural gas. Is all it is. Um, Obviously, talking about the war, again, the VIX is up 3.41%. It's a decent amount, and that's where the close was. And you can see it immediately spiked over the weekend. Again, everybody else thought that this weekend was going to have more fireworks. It didn't. So it's leveling back down, and there's really no headlines right now that I would say are major. There's some with China, Russia doubling down. Again, it's easy to say when an army's retreating, it's like, oh my God, look at all this bad stuff that they did. I mean, it's the victor writes the story. But with it higher, technically we should have all the indices down. And right now the YM is down. Everything else is flat, floundering. I mean, ES is point up 0.04. Russell's up 0.08. I would look at this and say, okay, the volatility is definitely higher than it was on Friday. People don't feel as good about the market, particularly with some of the comments. And again, you have one guy in Germany, spear rattling, and then the guy that focused on the economy, it's like, stop, don't do that. That's bad, So I would say right now, again, a lot of the headlines, it's nighttime over there. I do expect we see the VIX go up a little bit more just as the U.S. trader comes online. There'll be some, a flurry of activity right away. But with that lack of any real news today, it's just going to be headlines. And right now,
Right.
I mean, obviously, oil prices up. People are going to see this and be like, you're going to raise the gas prices even more, so there's going to be more of that. And then again, there's a story about China bends and Russia doubles down. So, this is a weird one. And like I said, is this helping anything? Not really. We don't really know what this means, but it just says there's no information on the talks. And, what is this? The leader of Poland's ruling party, swaying Warsaw, would be open to having U.S. nuclear weapons on its soil. So that's a reason why the VIX is going higher. Because I'll tell you right now, U.S. nuclear weapons go to Poland, Putin will push the red button.
So
This is the Cuban Missile Crisis, but in the
we
opposite
just
direction.
don't know. Yeah. So you got VIX up and markets. I mean, generally when the VIX is actually a calculation off the S&P implied volatility. So and it just as the market goes down, the VIX generally goes higher as fear creeps in. It's just odd that we're flat and maybe even slightly green, and we're seeing that volatility kick up, which just means people are expecting uncertainty. There's a lot of uncertainty and a little bit of fear.
Yeah, and what the other thing too is, again, the volatility index is based off the options off the S&P. It's not the actual S&P itself. So and options traders tend to get into the markets before retail traders. So it's a way that, and again, there's different levels and different stages of traders development. Again, options is not a beginner's thing. Binary options is a little bit different, but options themselves, traditional options, are considered like a couple levels up from a regular stock trader. So option traders are already in the market, but things like this, comments like this, and this came out about 5:30 this morning, is probably why the VIX held and is going higher now. And again, this is the Kremlin condemning us. Such actions would only heighten tensions. And again, remember, the Cuban Missile Crisis happened because Russia was going to put nuclear weapons on Cuba. Putting them on Poland right next door is the exact same thing in the opposite direction. Putin's already made those comments. So again, Poland's ruling party, Poland's about to get stomped in this whole situation as well, because Putin's never going to allow nuclear weapons that close to him. So that's probably why we're seeing it. Again, in regards to the indices, it's real fast. I mean, they're all bouncing off of levels where we saw big drops on Friday as well. It's already an area of sellers there. It's already kind of pushed down. The question is it pulling back for a little bit of a rally today? If we do the reversal on the fibs right now, you can see that the reversal, we are kind of at the 23.6 area. We've already pushed through it one time prior, and we weren't able to get down to the 50. But right now, with the VIX going up, the opening print there, again, depending on what the news kind of brings this up, we're already in an area we already should be in a short position. So, looking at the ES, I would say if the ES starts to roll red, would not be surprised at all. Then again, kind of target for this one would probably be down right here. Right, 45.26. It's an area where, again, there's not a lot there, but fib traders are going to look at that and say, okay, listen, after the 23.6, that's going to be the next level in there. There is a little bit of buying coming in at 45.29, but again, that turns us off, red. And again, nuclear weapons and the word recession. None of those are things that people want to hear. NQ also in a similar area, right? This is if we pull the the down area, you can see that the 23.6 kind of gave a little bit, late Friday, and then we've kind of cycled around. I'm going to pull this one off, and we're going to do the same thing from bottom to top. You can see that we're also at the 23.6, but we did bounce right off of a level. So it's kind of like, do we want to go long into an area of sellers? Not normally the best thing, and there's not a whole lot of positive data out there that will correlate with this going higher. So again, I'd be cautious with it. It's already kind of pulled back from that level again. And again, with the VIX this high, question is that the options traders already know what's going to happen today, and is this a sell from the open? YM has turned. Again, YM also same level we had from Friday. Again, we started off early this morning. It went down, found those buyers, right? Found those buyers, and again, here's your fib in the opposite direction. Got pretty close to the 50, sliced through the 23 like it was nothing. Question is now, with all the chopping, let me erase this so it's easier to see for you. Pull that up. With all the chopping that's occurring in here, right? If we start to come through, this is a pretty nice little run. Do we come all the way back down to
Right.
34,500? And I think that's got to be on the radar today because it is the weakest, and the VIX is now starting to increase. It's up at 4% now, so it's creeping higher. If one of these other ones starts to roll, everybody's going to say, "Wait, we got two indices in the red now." That's it. This is the weakest. This has the most potential to drop down to 34,500. And Russell's in the same thing. We're bouncing into a small area. Again, got plenty of room. It sliced through the 23 in the other direction, and then bottom the top, you can see right there. A lot of room, and that's actually there's some sellers down there. So I would say that for Russell, downside target to 2078 today. So right now they're all kind of holding firm. Question is what's going to happen right at that opening print. And again, VIX is right around 3.92. So VIX is again showing that it has the potential to go higher. And again, it's not a buy sell type investment. This will be
No.
really off the opening print. So.
Yeah, and that would, but VIX higher, it really generally indicates equities in
Yep.
the red. So,
Yeah. Yep.
all right. With that, any questions for Nadex, please email us customerservice@nadex.com. We're here to help. Best way for us to help you is if you let us know you need some help. Brian and I are also accessible. Both of our emails are up there. If you have questions for Brian, please feel free to reach him at support@keeptradingsimple.com. I'm available at todd.rich@nadex.com. And again, it's a little bit of a quiet start to the week when it comes to equities, but we are seeing some volatility in those energies. Oil and nat gas both popping a little higher, and it really is around the uncertainty about what's going on in Ukraine. Uh, and we're also seeing, just higher inflation. Jamie Dimon kind of put it out there in the letter. We've got this era of rising interest rates coming. We are getting some signals of recession with the 10-year yield beneath the 2-year yield. So we've got a slightly inverted yield curve there between 2 and 10. And it's there's just a lot of uncertainty out there, which is also why we're seeing the volatility pop a little bit. Brian and I will be back again tomorrow morning. So until then, please, wherever you happen to be catching this, Facebook, YouTube, give us a like. We do appreciate that. Brian and I will catch you again tomorrow morning. And until then, good luck in the markets, everyone. Thank you so much for joining.